Hello everybody, welcome to another session of Income Tax Act 1961. This is lecture 6 I think so. In this lecture, we will discuss a beautiful concept called marginal relief. Before we going through that concept, first we need to know about a concept called surcharge. If your income is below 50 lakhs, you don't need to pay surcharge. You only need to pay only just income tax plus education cess. If your income exceeds 50 lakhs, then you need to pay tax on tax called surcharge. For better understanding, take an example. Suppose your income is 60 lakhs. Assume that your tax liability is 10 lakhs. On that 10 lakhs, you need to pay 10% as a surcharge. That means 1 lakh. Total 11 lakhs is your tax liability. On that 11 lakhs, you need to pay 4% as a health and education cess. This is the concept. For a few people, those income is just 52 lakhs, 50 lakhs, 50,000, 51 lakh, 53 lakhs, 54 lakhs, 55 lakhs, like that, just above the limit. Then they need to pay, along with income tax, they need to pay surcharge also. This is unfair, na? Because of that 50,000, because of that 1 lakh, because of that 2 lakhs, they need to pay extra tax called surcharge. Then income tax department bring a concept called marginal relief. That means a procedure laid down by income tax department. If your income is just over and above of the 50 lakhs, that means 50 lakhs, 50,000, 51 lakhs, 52 lakhs, 53 lakhs. To reduce taxpayer SSI's tax liability, income tax department laid down a concept called marginal relief. Today we will discuss about marginal relief concept. We will try to complete today's video itself. Okay, let's see. The purpose of the marginal relief is to ensure that the increase in the amount of tax payable, including such as due to increase in total income of an SSE beyond the prescribed limit. Are you getting the point? Okay, should not exceed the amount of increase in total income. Okay, that amount, that 50,000, that 1 lakh, like that. They provided a concept and the rates also given here. We will see one by one. Okay, marginal relief is available in case of such person paying tax under default reason under section 115 BAC referred to in above. That is, under section 115 BAC, how marginal relief is available, what are the surcharge rates also given here. Okay, if SSE income is in between 50 lakhs and 1 crore, SSE income is not exceeding 1 crore but exceeds 50 lakhs, then he need to pay 10% of the income tax liability computed, and on that 10% of surcharge also need to be paid. Okay, let's see here how to compute marginal relief in case SC income is in between 50 lakhs and 1 crore. Okay, let's see here. Compute income tax on the total income. Compute income tax on the total income. Suppose if SSE income is 60 lakhs. On that 60 lakhs, compute how normally we compute income tax. Okay, just up to 60 lakhs tax liability plus surcharge 10%. Okay, bus, that's it. And compute, second step, compute up to 50 lakhs, compute income tax liability, and then add the excess amount in excess of that 50 lakhs to the tax liability, and take A or B, lower of these two. They are saying same like that. They are saying same like that. 1 minute. They are saying same like that. Compute income tax on the total income and add surcharge 10% on the such total income, that is referred as A. Okay, take that one as A. And compute income tax on 50 lakhs. Compute income tax on 50 lakhs. Okay, 50 lakhs. And then total income in excess of 50 lakhs. Separate the total income in excess of 50 lakhs. And then add the amount computed in step 2 and step 3. We get some tax liability in step 2 now. We get some tax liability in step 2, that 50 lakhs. Further, to the tax liability, add the amount in excess of 50 lakhs. And you derive something B called B. Okay. Step 5 is income tax liability on total income would be lower of the amount arrived at in step 1 or step 4. We derived two amounts in step 1 and step 4. Lower of these two is your tax liability. Lower of these, step 1 and step 4. Step 1 and step 4 is your tax liability. Lower of step 1, lower of step 1 and lower of step 4. Step 1 or step 4, both to compare these both two and check which one is lower. That is your tax liability. Okay, on the tax liability, you need to pay health and education cess also. Health and education cess also. That's it. That is the concept of marginal relief. Same like that, if your income is in between 1 crore and 2 crores, if your income is exceeds 1 crore but below 2 crores, you need to pay such an amount 15%. Same like this. What we done previously, same procedure will apply here. Are you getting the point? Same procedure will apply here. And same like that, if your income is exceeds 2 crore, then the surcharge amount is 25%. 25% surcharge you need to pay. Okay. Same procedure. What we discussed earlier, same procedure will need to apply. Okay. It presumed that total income referred to above does not does not include dividend income, long-term capital gains taxable under 112A and short-term capital gains taxable under section 311A. We assumed that above income does not constitute income from dividend, long-term capital gain, short-term capital gain. If the income constitutes long-term capital gain, dividend income, all these incomes, then maximum surcharge rate is 15%. Maximum surcharge rate is 15%. Okay, are you getting the point? Okay. Then, in case of individual HUF, AOPs, BOIs, artificial judicial persons, the option to shift out of the default tax regime, the income tax computed in accordance with the normal provisions of the Act are section 311A, R, 112R, 112A, R, 11BBE, R, 11BBJ would be increased by surcharge given under the following table. Okay, under the optional regime, what are the surcharges? Under the optional regime, the maximum surcharge rate is 37%, not 25%. Okay, let's see. Where the total income, including dividend income and capital gains chargeable to tax under section 311A, 112 and 112A greater than 50 lakhs but less than or equal to 1 crore, then surcharge rate is 10%. Example, components of the total income components, dividend income, short-term capital gain, long-term capital gain, and other income. Other income is 25 lakhs. Then surcharge would be levied at the rate of 10% on the total income tax, computed on the income of 90 lakhs. Okay, are you getting the point? Next, where the total income, including dividend income and the capital gains chargeable to tax under section 311A, 112 and 112A is greater than 1 crore but less than 2 crores. What is the surcharge? 15% is the surcharge rate. 15% is the surcharge rate. What are the incomes? Dividend income, short-term capital gain under section 311A, long-term capital gain under section 112, long-term capital gain under section 112A, other income. Okay, surcharge is 15% of the total income tax. Okay, now then, where the total income excluding, are you getting the point? Where the total income excluding dividend income and capital gains chargeable to tax under section 311A, 112 and 112A is more than 2 crore but less than 5 crores, then 25% surcharge will be applicable. See here in the example, dividend income is 51 lakhs. And short-term capital gain under section 11A is 44 lakhs. Long-term capital gain under section 112 is 42 lakhs. 112A is 55 lakhs. Other income is 3 crores. Here you need to see only other income. Other income exceeds 3 crores. On this other income, surcharge of 25% will be applicable. Only dividend income, long-term capital gain income and short-term capital gain income, maximum surcharge is 15% only. Are you getting the point? Only other income exceeds 3 crores but less than 5 crores, then 25% surcharge on income tax will be applicable. Okay. Next, such as, okay, see the answer, dividend income, such as at the rate of 50% would be levied on the income tax on dividend income and dividend income. We need to segregate dividend income, short-term capital gains, long-term capital gains. Okay, if the income comprises both the special income, dividend income, short-term capital gain, long-term capital gain, and other income, we need to divide that income separate. On those incomes, we need to calculate such as differently. Okay. If you see where in the optional reason, where the total income excluding dividend income exceeds 5 crores, then such as rate will be 37%. Are you listening? 37% is the such as rate. Where the total income excluding dividend income and capital gains chargeable to tax under section 311A, 112 and 112A is greater than 5 crore, then 37% is the such as rate. 37% is the such as rate. For given an example, dividend income is 60 lakhs and short-term capital gain under section 11A is 50 lakhs, long-term capital gain under section 112A is 42 lakhs, long-term capital gain under section 112A is 25 lakhs, and other income is 6 crores. Other income is exceeding 6 crores. Then the such as rate is applicable to 37%. Are you getting the point? Such as rate is 37%. Such as at the rate of 50% would be levied on the income tax on the dividend income of 60 lakhs, short-term capital gain 50 lakhs, and long-term capital gain 42 lakhs, long-term capital gain of 25 lakhs. Just 15% is the such as on that. On the other income is then on that income, 37% would be levied on the income tax on computed on the income of 6 crores included in the total income. Okay. Let's see another. Where the total income, including dividend income and capital gains chargeable to tax under section 11A, 112, 112A, is greater than 2 crores in cases not covered in 3 and 4. 3 and 4, 15%. 15% is the such as. Okay. Okay. We just saw the surcharge rates. Now we see marginal relief concept, how the marginal relief will be computed. Okay. Let's see. Where the total income is 50 lakhs or more than 50 lakhs but less than 1 crore, 10% such as will be applicable on income tax. Okay. Compute income tax on the total income. How you will calculate a marginal relief? They are showing the procedure. Income tax department is showing the procedure. This is law. We need to follow law as per law. Okay. Okay. Then compute income tax on 50 lakhs. Okay. We have already discussed it. Okay. Total income minus 50 lakhs. We get some extra amount. Because of that extra amount, we need to pay such as that extra amount added to the income tax up to 50 lakhs. Okay. Then compare this for step 1 and step 4. We get a lower of these two and then add the health and education cess to that amount. We will derive some tax liability. Okay. Same like that. Same the procedure is given here. Okay. Same the procedure is given. Okay. 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 We will go with the question and we will get a clarity. Okay. Compute the tax liability of Mr. A, aged 42 years, having total income 51 lakhs is the total income. Okay. For the assessment year 24-20, assume that his total income comprises of salary income from house property income and interest on fixed deposit. Assume that Mr. A has exercised the option to shift out of the 115 BAC. Okay, 115 BAC. He want to shift from 115 BAC. What are the surcharges? If he opts for the 115 BAC, surcharge rate is maximum 25%. If he shift out from the default region, he selected optional region, his tax liability is how much? His surcharge rates are 10%, 15%, 25%, maximum 37%. Okay, excluding that dividend income, short-term capital gain income, long-term capital gain income. Okay, okay, okay. Computation of tax liability of Mr. A for the assessment year. If you see, we computed under the optional reason, he is below 60 years, then the basic exemption liability is 2,50,000. In between the 2,50,000 and 5 lakhs, his tax liability is 5%. And that means 12,500, 5 lakhs to 10 lakhs, 20%, 1 lakh, 10 lakhs to 51 lakhs, 30%, that means 12 lakhs 30,000, total 13 lakhs 42,500. Add the surcharge at the rate of 10%, that means the total tax liability is 14 lakhs 76,750. This is the step 1. Okay, we need to go for step 4. What is the step 4? What is the step 4? We need to go for step 4. Okay, na? What is the step 4? Step 4 means compute the tax liability up to 50 lakhs. Compute the tax liability up to 50 lakhs and then in the excess amount over and above 50 lakhs, There is an amount is there, na, add that amount to the tax liability. Same like that. Okay. Income tax computed on total income of 50 lakhs. We computed income tax on 50 lakhs. What is the income tax on 15 lakhs? 50 lakhs. 13 lakhs 12,500. Total income less 50 lakhs. What is the amount? 1 lakh. We add both these two. Whichever is lower our tax liability. The lower of A and D. 14 lakhs 12,500. On that lower amount, we need to pay. What we need to pay? Health and education cess of 4%. Health and education cess of how much? Health and education cess of 4%. Okay, health and education cess of 4%. And then what is the marginal relief we got? Difference between A minus D, step 1 and step 4. That is the marginal relief. That is the tax amount we are saving. See here, how much amount we saved? 64,250. 64,250 rupees of tax amount we saved. Okay, how beautiful this concept. Okay, I hope all you understood this concept very well. We will meet in next video. Okay.